Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over the relative pumps on the crypto market here, and just take a look at stocks to see what's going on. Of course, we do see a very red day, except for energy, which that's not good in the stock market, but that does contrast quite significantly with the green on the board in crypto. And so it's just one of those divergent days, and we just have to accept that this sometimes happens. You can see that we did get news today. Of course, we got a lot of employment news, and basically, payroll was on par with expectation. A few thousand jobs, just minimal out of this 315,000 jobs, right? So all of this is just what was expected. The unemployment rate did tick up. This is what the Federal Reserve wants to see, and it ticked up not because people were put out of work, but because more people entered the labor force. As you can see here, the labor force participation rate actually increased almost 0.5%, which is pretty significant for a population. And so that means that these people are now looking for jobs, and so they added a little bit to the unemployment rate. You can see that's approximately, point 2% there of this unemployment rate increase basically came from this 0.4% of new people entering. So about half of them got jobs, half of them are searching for jobs, but they newly entered. So that's quite reasonable. So jobs really have not been impacted yet, but more people are entering the labor force, which means that they'll be competing on wages, which should take down inflation on wages. And that means that the Federal Reserve probably can have a little bit more easiness in its heart, and that lowers the chance that they'll just do like a super high interest rate increase. But since we did see energy pumping in the stock market, again, that's not good. So those two things can kind of counter each other. What we don't want to see is energy spiking again, and that would just contribute to inflation and would actually encourage the Fed to make interest rate increases, which do suppress the market. So, we're still negotiating these things, Alpha Fam. It's very complex and just trying to stay abreast of it all. Next week, of course, we do have Labor Day on Monday. So that means that this weekend is going to be very tricky. There could be a lot of market maker shenanigans on the crypto charts, and maybe that's why you see crypto pumping, even though the stock market clearly had a bad day. That divergence between the 24/7 exchanges, which operate even on holidays and evenings and weekends, versus those professional exchanges, which are closed on the weekends, evenings, and on holidays. And so that allows the market makers of the 24/7 exchanges to have considerably more power for the next 3 days, and they will take advantage of that in some way to try to liquidate some people to try to make money. So let's just watch out for the holiday weekend shenanigans, shall we? Off to the charts. Here we have, the professional exchange, the CME futures for Bitcoin. And basically, I have it on log scale here, but I can take that off. And what we can see is that essentially, price is exactly where we left it before, just barely hanging on to its momentum zone. So the professional exchanges, they do have a chance to pump, But again, like we're under our weekly EMAs that we need to be over in order to have some macro bullishness, and so just we're not macro bullish. On the daily, you can see that we are rejecting off of that critical 9 EMA and 10 MA that we need to hold on to in order to achieve bullishness. So even on the daily, this looks very weak, guys. We're almost losing the 4 and 5 EMA, which is really bad because when you lose that, you can see this type of drop which can occur. This arrow right here, that's really meant to be drawn on the log scale chart. You can see that there. So once again, there's a difference between log and regular linear charts. It's which is basically that they just give you a totally different perspective, and I'm not always sure which chart different traders are trading on. A lot of professional a lot of professional traders are using the log chart over long distances of time. And now that we've basically put in, a year right here, it could be that we're looking at this logarithmic chart, since this is kind of exponential numbers that we're looking at. But I would say perhaps the linear chart is still going to win out, even though this is a very clean look on this. And so I am starting to take a peek at it. I would say this type of move is more exponential, where you get that kind of parabolic action, and that's more when the log chart comes into play. So I'm going to continue to use the standard linear chart and just a turn log off. But if you're wondering why those things weren't aligned, that's the reason why. But I'm going to keep them there just to monitor that. Heading over to the Bitcoin 24/7 exchanges, of course, we can see a slightly different picture. I am on linear now. And you do see that falling wedge still has broken out. It has, I mean, we could consider it bullishly retested. You can see a little bit of flicking back and forth between red and, green, basically, on this candle. In fact, it's doing it right before our eyes, just a twinkling red and blue, which is my color that I use instead of green. But the market is really trying to decide what it's going to do this weekend, and it just feels kind of bearish, guys. We do have our momentum levels for the day down here, so they are tightening up. You can see these two levels have just tightened very close together. The spread has very much been reduced. We wicked down to them and we bounced off. So I consider that fairly bullish. I consider this chart to have retained its daily momentum, and so that could come into play on the weekend, and only until we lose this $19,700 level, then I'll become significantly more bearish. But we do have a support underneath us, a couple different levels actually. So it's unlikely that we're just going to dump straight down through this level. We've had lots of buyers in this zone many times. But hey, if things get too weak, maybe the market makers could even just push us straight down, right? They've done it before and they can do it again. In order to capture that bullishness on the macro, we have to achieve over 21,000 and then secure over 22,000 as soon as possible. And of course, we just haven't done that. So I can't even be open-minded to bullishness on the macro until we capture this area. But for the day, we've got the momentum that we need to just consider the upside for another day. Heading over to Ethereum. Let's go to Ethereum's CME chart, and we can just take a look at what's going on there. Of course, we did tease with the momentum zones on Ethereum, and we got heavily rejected from them. So this is a fairly bearish look. We're still, we still have our daily stoke. So, that should actually just save us for another day. We can be open-minded for another day, but we are getting bearishly rejected from this kind of these macro numbers that we need in order to be bullish on the CME. And I'm not seeing anything special here, no new gaps or anything like that. So let's just move on to the Ethereum chart. On the Ethereum chart, of course, we do have a slightly better picture. And let me just double check with our indicators here. And I can see that yep, I mean, basically nothing has really changed, so we can see that we are still quite fully ahead of our momentum zone. In other words, this thing can easily continue to the upside, and we can consider this just a bullish check back on the breakout of this falling wedge, which does have a measured move up to $2,000. It's just that similar to the CME chart, those professional exchanges, we are getting pretty heavily rejected by these kind of momentum zones for the macro. So Ethereum doesn't seem to want to push into that kind of macro bullish zone, and it's almost rejecting the chance to just skyrocket here, which under normal considerations, you might think has a 70% chance to break to the upside and have this type of a measured move. But, the market is just a little bit sour right now, and so it is, rejecting that bullishness. So we may end up seeing, Ethereum just kind of retest some of these lower areas or chop around. Who knows? We're just going to be monitoring this. But again, it hasn't lost its daily momentum. That momentum's going to be valid through the next 21 hours. So good luck to Ethereum. Maybe you can pull it off, right? But let's just go ahead and move over to the VIX. As you can see on the VIX, there was this just massive fake out as everything was looking to potentially pop up bullishly, right? As the VIX pulled back, which would be good for trading, right? We want the VIX to drop down. That's that volatility that makes it difficult to trade. And so as the VIX was pulling down, it looked pretty good, but then we just had a massive push up as markets just reassessed their current situation and volatility re-entered the picture. And so, hey, maybe this was just a check back and it's going to continue to the upside. We didn't get to fill in that CME gap on the VIX over there. So, maybe it could try again, but just paying attention to that. For the DXY, very similar look here. We basically got a, rug pull, right? Like these wicks, like they're massive, right? They're just massive. And so, when the price of the dollar changes this much, it really does affect trading. So, this is I'm not really sure what to make of this right now. We do have a lot of these wicks on the dollar, and it could just as easily go up as it could pull back the next day. But let's just pay attention to this because clearly it was uncomfortable just sitting down there and very quickly pushed back up. So the dollar still bullish. I think that because the dollar is so policy based, we can't say that it has a bearish look until policy changes, right? Even if the chart itself has bearish divergences or whatnot, it can continue to push up based upon political policy. It doesn't have to be because of how it's being traded or how traders are trading the dollar. Um, if people are scared because of macro policies, then and global financial, crises and things like that, then they're going to flee to the dollar, and that's all there is to it. You know, you can do as much charting as you want, but that's your logic basically. We do have this kind of trend line right here, which would suggest, along with our parabolic curve, right, that growth curve that I had modeled out, which leads us up to this line, we now have this trend line on top of price action, which they actually intersect at the same point. And, you know, if we were to use a longer chart of the US dollar, there's also 114 and is a significant number. So I think we could pop up to this 114 level eventually, maybe by the end of the year, before we get to see some really serious consolidation to the side, you know, something like this, something like this, something like this that would have a significant amount of time in a dip. Whereas we just kind of had a small dip here and a small dip here. We really want a bigger dip than that. We want a little bit more time to trade than just a month or two. And so, because we have to get the pullback and then we have to have it go sideways, right? So, you know, anyway, we're just paying attention to this. I would eyeball 114 as a pretty reasonable limit on the dollar, though, at least for this generation of moves. For the next generation, maybe 118. And from there, if it actually gets above 118, then the sky's the limit, to be honest. So let's pray that we get a pullback at 114, if not right now, right? So, we're just going to be watching for this. USDT dominance, basically the same thing, just middling around in this kind of channel that I took a look at. And again, you know, it's got that kind of bull flag look that looks like it wants to pop up to the next level. But if it did just make a lower high, that wouldn't be any big deal. I think all of this, the the dollar, USDT dominance, tether dominance, and then the VIX, the volatility. They're just waiting for the Fed's decision in September, which will kind of indicate to the market which direction will go. Looking at the QQQ, you can see easily the results of that dollar spike. And what happened, guys? Look at this. The QQQ was pushing up, just what I suggested. Let's go to a 4 hour here. It was pushing up just like what I suggested, or let's go to the 1 hour since I'm trying to standardize how I look at these things. Uh, I suggested this could be a breakdown, and then I think that we're just bearishly retesting this line, and that there would be a high likelihood that we would break that back down. And guess what happened, guys? Right? Compared to my very last video, right? We broke back down right off of this trend line. Of course, this trend line doesn't have to be perfect. You know, sometimes you can ignore these wicks and whatnot. So we can just kind of eyeball it like this. But basically, you can see what happened. We got a pretty significant rejection right off of this trend line, and it just is continuing to break down and suggest. I mean, this whole look of this chart suggests to me that we are going to try for lower. We're probably going to fill in this CME gap at 287 on the Nasdaq QQQ, and maybe even retest the June lows here, if not push lower. Of course, for the Nasdaq 100, that kind of tech-heavy, index, you can't see very similar thing. Just chilling out in my green zone, basically perfectly tagging it there. So, yeah, I mean, this is where I would expect price action to kind of chill out at, and maybe wait for the Federal Reserve to make a decision. Maybe we get some type of dip down to this trend line while we wait for the Fed's decision. But overall, this is a pretty good area just to chill at, guys. So that's why it was my target. So here we are. And hopefully, if we can get some consolidation to the right, then maybe crypto can pump, right? At least temporarily. Let's see here. Same thing on the S&P 500. Just kind of tapping the top of that zone. I didn't really get into the middle of my box. That's the ES1, of course, the S&P futures, and then over at SPY. Basically the same thing. Maybe I had my line a little bit too high. It's hard to tell. All of these lines are pretty choppy, full of holes, right? And so, we filled in this CME gap and just kind of holding this area. We did, kind of establish more of a realistic trend down, which I think is probably one we'll respect. You can see that usually the trend is defined by the next two peaks, not actually the top peak on these different S&P mounds. And so, if this is our new trend, it's pretty much being established right there. Did I draw that out on the QQQ? Yeah, I did, but I didn't adjust it yet. You see, um, this is just something that I've kind of realized is that this trend tends to be off these, the second and the third peak, um, kind of see what I mean here, right? Like these kind of, not the top peak. So when you're drawing your trend line for these, downturns, it's just that the top is kind of rounded, and so then it quickly accelerates. And now that we have this peak right here, we can kind of see more of an expectation of what a more realistic drop would be. And the reason why that's important to chart that out is only because when we turn around, we often continue to break down even lower than our turnaround point and then retest that line from the top side, and then we can see a turnaround from there. And so, in many different of the indices that happens. And so I'm just kind of fidgeting with that line right now. Um, because most people would probably draw a trend line from here and like here. It's just, if you do that, of course we can be talking about this one, but it doesn't really get in this drop move. So I'm really trying to capture the drop move. Hope that makes sense. I want to see how we chop down, and it looks like we're going to chop down on this type of a path. Guys, that's pretty much it for stocks. I did add another coin, CRV, to the list. So let's just check out to see how CRV is doing. Basically nothing. It's just consolidating, right? So really it hasn't moved anywhere at all. So let's just move on from that. We can see ADA also not doing anything, just holding its support. Kadena. Kadena is looking a little bit weak here, guys. Not gonna lie, you got kind of this. Well, this could be a BART. Maybe it does pop back up, but this could also be kind of a head and shoulders kind of thing. On the 4 hour, that looks a little bit ugly, like a head and shoulders. That could drop us down. So Kadena looking weak. It really needs to break out of this downtrend here. So just pay attention to that, okay? ZIL also looking pretty weak, guys. So nothing significant here. This is much more of a BART formation, so maybe this stuff does pop back up and just kind of recapture these candles over here. But just to be careful, guys, because these formations can drop as easily as they can pump up. Okay. Let's see here on Flux. Basically, this is a new one that I added today. Was doing some analysis for somebody in the group. Was showing some EMA, how to use the EMAs inside of the group. If you guys want to join Alpha Commission, it is free. You can just click on the link in the description of this video. Of course, this group has existed for over a year now, and we just kind of chill out there, share some tips and tricks, maybe look at different coins together, and so you can join us if you'd like. There's no there's no pressure on you there or anything like that. And it's not a paid group, so I'm sorry there's no like formal education presented or anything, but you can just kind of chill, ask questions, that sort of thing in the group. And that's how I picked up to look at Flux. Flux has actually done an amazing, look at that, 200% from the bottom there in June. And so I wish I had been looking at this one earlier. I did mark out some support and resistance for it, so we can kind of see that we are basically just at what I would consider resistance. We did have a bit of a head and shoulders here, which did have a measured move, which basically has worked out. If we look at the log chart here, it basically has worked out, and so profit taking was to be expected. And then, of course, being underneath this kind of resistance, probably not the best time to get in. But I did notice that, it's not like its daily EMAs were bearish or anything. This thing could easily bend down and squeeze to the downside. But right now, you're above both your 5 and your 10 MA, and you're also above your 200 MA and also the 200 EMA. So, hey, on the daily, looking not so bad. On the weekly, a very similar picture. So, this is not looking that bad. The only thing is that the squeeze, like the real squeeze, was down here at around 75 cents, and then you had kind of a preliminary squeeze around 56 cents. So the main thrust of this move is over. Could it continue up and just continue to surprise people? Yeah, you can see a lot of profit taking though, so let's just pay attention. I think this will probably just follow the rest of the market. It could get into one of these behaviors like this. You see this cup push up, kind of pull back, and then another push up. Flux traders may just be expecting that, and so maybe this thing could prepare for a pop up. So I am going to continue to monitor Flux. I'll probably be more interested around a dollar two. Let's go ahead and go to the daily here again. Probably be more interested around a dollar three, right? Like if we can kind of take out this candle over here and then show some bullishness, you'll basically have made like a cup and handle out of this little formation. And so that's going to just give me a little bit more confidence that we can push through this resistance zone. Since we are just breaking down right now, I don't really like that. Underneath 99 cents, 99 and a half cents. Really, I think this thing could just get weak and turn around the way that it did, up here, right? So this sort of thing, you can kind of see that similar kind of toppy look, right, starting to take place right there. So this thing could easily just pull all the way back, right, to maybe 70. Well, maybe to 91 cents or even lower, guys. I mean, this market's crazy, right? So we are going to continue to monitor these different coins, and I am trying to integrate more of these altcoins into my basket of coins that I review. I hope you're enjoying that. If anything significant is going on with them, then I'll try to cover that. I did upgrade Zilica's chart, as you can see, so I think we're all pretty standardized in the look that I'm going for on my channel here. Things are looking pretty clean, and so going forward, hopefully, this is a better experience for some of you who've been watching for a while compared to my kind of Wild West days of just tying a string with a little, pins on a chart, right? Going with lines all over the place. But hey, guys, that's what this channel is about, right? We're continuous learners. We're trying to just support each other as we move forward, increasing our skills. No one is claiming to be perfect. And if I get anything wrong or if there's anything that I can improve at, please leave a comment in the discussion area of the group. Again, the link is in the description of this video, or you can just leave me a comment, of course, on YouTube. But we all enjoy some company, so feel free again to join the Discord, especially during a bear market. That's the perfect time to learn and plan which coins you want to get in case we do have that just crazy pullback in the market. The winners are going to be the ones who got in then, right? Like, you don't want to just come into this stuff during the bull market. You want to be accumulating with the whales, with the venture capitalist, right? With the institutions. You want to be accumulating with them during the bear market. And so this is the most exciting time in crypto, even if everyone else thinks it's the most boring. All right, guys, that was your alpha for the day. Stay safe and happy trading.